Hi, welcome to the Charleston-area Skinny from the Charleston-Trident Association of Realtors, where we dig into the most recent numbers from our market. Some people talk about the national housing market as if it's some static thing, like a toaster. The thing is, there is no national housing market, just like there is no national weather forecast. That doesn't mean national averages don't have their place, but you don't grab a raincoat and an umbrella in Miami based on the weather in Seattle. Like the weather, all real estate is local. As we embark on the fourth and final quarter of 2011, let's take a look at our local forecast. Pending sales increased 20% from the third quarter of 2010 to arrive at 2,625. Nowadays, purchase demand is being driven by low rates, bargain deals, and, let's be honest, favorable year-over-year comparisons to 2010. Those gains in purchase demand are still chipping away at the number of active listings on the market. Inventory levels were down 18.9% to 7,792 units. Markets around the country are shedding supply. It's usually a leading indicator, and the Charleston market is looking at inventory that is the lowest it's been in 5 years. Prices were down from last year, which could simply reflect strong sales activity in the lower price brackets, which are currently laden with foreclosures. The median sales price was down 4.8% from the third quarter of 2010 to $183,750. Some finely tuned observers are watching alternative indicators even more so than prices. Why? A number of things need to happen before we return to sustained price growth. For example, the supply-demand balance needs to stay under 6 months for a decent stretch of time. Absorption rates is really just a fancy way of saying how quickly buyers can absorb the active listings. Month supply does a good job of assessing this balance. Last quarter, it was down 21.1% to 9.9 months. A dash of uplifting economic news was overshadowed by debt clouds from the ongoing turmoil in Greece and, of course, the threat of bank contagion. Manufacturing activity, construction spending, and overall job growth all picked up in September, temporarily calming fears of the dreaded double-dip storm. As for the lending climate, the Fed's recent Operation Twist helped push mortgage rates to record lows, under 4% for the first time ever. Despite the cheap money, jobs, jobs, jobs should still be the battle cry. That's the Charleston Skinny for this quarter. Check back next quarter for the latest.